Tonight's webcast, though, is on picking direction. It's a very important skill to have as a trader, arguably the most important skill. Trading isn't so simple that I think you could just boil it down to that. Obviously, there's a lot to be said about all the other kind of things that you need to take care of. Your own psychology being a really large factor as well. If you've got some experience tonight, you'll probably understand where I'm coming from. If you don't and you're new and you're just kind of looking around and having a bit of a peek at what, the type of things that you might need to know if you were to go down this whole trading path, tonight's webcast should be fairly informative. I really appreciate you all taking the time out of your nights to come and hear what we have to say. I know I'm it's either me or the couch, right? Or whatever you do in your evenings. So I'm glad I've won for some of you, which is great. Thank you very much. If you get bored of me, or you can't, if you can't watch it for whatever reason, you have to leave. Don't worry, there is a recording, and we'll make sure the recording gets to you. The other thing that you can do is you can jump onto our YouTube page and you can subscribe, and you'll get these kind of some of these webcasts we'll upload to YouTube so that people can view them later. We obviously going to run webcasts quite repetitively sometimes, just because people miss them and want to be able to attend them live. But uniquer ones are placed on the YouTube page, and we do cover like really interesting topics. And it's not just me going through basic stuff. There's some really quite intricate and sophisticated commentary on parts of the market that you might not be used to hearing about on that YouTube page as well. So I implore you to go have a look there, so you can maybe perhaps round out your knowledge, or if it was just something you might be interested in general. So I'm just going to get stuck into it. I think we're at that stage, aren't we? It's a couple of minutes past 7, so we can start. You might be wondering who you're listening to. There's a lot of people online who are clients. There's people online who've listened to webcasts before. But if you're joining us for the first time tonight, welcome. You're hearing from Traders Circle, which has been around for since 2005, so 16 years now. That's quite some time, isn't it? And what really our job is to basically help traders. So we're traders ourselves, and we're professionals. We're licensed to give general advice only, which I'll run through in a moment. And we want to be able to equip you with the skills so that you can trade, and then to be able to support you in your trading. So we do run education, we do provide advice, we do give trade ideas, and we equip you with those the necessary tools as well, like platforms and calculators and stuff like that. Emerald Financial, on the other hand, is a lot more lower touch. It's less focused on support. It's more about medium to longer term investment, where it provides investment recommendations, has a different platform. You guys are welcome to explore Emerald Equities if you're interested in that type of that side of things. But tonight is really about trading. It's about shorter term. We believe that because shorter term, you can make more money in the short term. Therefore, you can lose more money. It does require a high degree of expertise, a high degree of skill and experience, and therefore knowledge. That requires it requires higher support, and it requires a higher touch from us. So that's what tonight is about. It's about shorter term styles of direction picking, and that's why you're hearing from Trader Circle. Now, my name is Carlo. Again, all of you should be fairly familiar. I don't look much like that picture at the moment. That picture is very old. I've matured, and I've also got much longer hair now because I haven't been able to have a haircut for 6 months. Right? I didn't get it cut whilst we had that brief period of not being in lockdown, and that was a bit of a mistake, I have to say. And I'm not letting my partner near my head with scissors, as I'm sure some of you can empathize. So it's a terrible photo, but unfortunately I've got nothing better to replace it with. And I say this every time I run a webcast, and I know it might be getting old, but it's the truth, I promise. So I've been with the business for about 10 years now. I'm so used to saying 8, but I've been saying 8 for a long time, and I think it's actually 10. I think it's got to be about 10 years now that I've been with the business. So I think I'm due for some long service leave. I think we're all due for a bit of a holiday, though, in fairness. But I work in as advisor on the trading desk, so I help people with their positions. They'll call me up and say, what do you think about this trade, or I'm in this particular position. What do you think? Should I close, or what do you think the market's going to do? So I give advice like all day, every day, and I give people trade ideas. So they might call me up and go, "Have you seen anything?" I go check these out. But another part of my job is to educate and to support, and I've been doing that for quite a long time. It's something that I think I'm pretty good at, conveying something that's fairly complicated in a relatively simple to understand way. And I have a lot of patience, so it's a big asset when you're trying to teach people something that's quite complicated. So if you ever come along and do a course, chances are you'll be working fairly closely with me, and my job is to really answer all your questions. I'm here to obviously help you from stop you from making those mistakes that you're kind of prone to making as a beginner, and just really kind of guide your learning and help you build experience. So, and that's what really, again, our trader circle is focused on. It's about providing sound advice, but also supporting you in your learn so that you can actually do this yourself. Now, enough about me. I just want to say before we kind of get stuck into it that any advice contained in this presentation is general only. All right, so it's not tailored to your personal circumstances, and you therefore need to decide for yourself as to whether it's appropriate to you. All right, and that goes for really anything that we do here. It's all just general advice. We're not taking into account your personal situations. All right, now before I get stuck into picking direction, I just want to kind of place it. I just want to explain where it sits in the grand scheme of things. Look, again, this is a fairly simplistic approach. Realistically or practically, it all kind of gets molded together in some ways, and there's a few other kind of layers to it all, right? But ultimately, if you wanted to be a good trader, then there's 3 key areas that you could focus on. The first one is picking direction, which again, we're going to cover in greater detail tonight. The second is strategy, and the third is risk management, right? Because obviously you need to be able to speculate on where the future direction of stock is going. You need to choose an appropriate strategy for that. And then if you get it wrong, you need to be able to manage your risk effectively, because you're not going to get every trade right anyway. And that extends into capital as well, capital management. And what kind of really brings them all together is a set of trading rules, if that makes sense. So that's another going to be another key feature of tonight, and that really kind of extends into any of the things that we teach here is that we try to teach it in a framework of having a set of trading rules, right? And there's a reason why they're important, because at the end of the day, as confused a man in front of you is kind of thinking, it's like, well, how do I digest all the stuff out there? Right, I'm reading charts, I'm reading the AFR, listening to the ASX. I've watched Jordan Belfort scam people out of money. There's COVID-19. What about the US politics? There's a lot going on in the world to kind of point you in one direction and to perhaps influence your trading, right? And that can be kind of hard to make a decision that you feel comfortable with or confident in, right? Especially when you really start getting into this. When you're a novice and you're just kind of like buying some stock, you just like there's not a lot of harm done, right? I mean, as long as it's not too crazy, it's fairly low risk. But when you start getting into the trading and the income generation side of things, it's important that you're able to take all that stuff, put it through a bit of a process, and come out with like a rules-based system essentially. Okay, and that goes across every aspect of our trading. It starts with picking direction. It continues through your ability through which strategy you choose, and it certainly extends into risk management as well. Why they're really important is, I would say, fairly obvious, but just to kind of outline that, it would be firstly to keep you disciplined, right? I mean, that's the whole, what it's really kind of all about. It just keeps you disciplined. It helps reduce your stress of decision making. It helps remove the emotion of it. It simplifies your decisions. And you can sit there and say, okay, look, I'm not making this decision based on what Dave said, right, at the pub. I'm not basing this decision on a knee-jerk reaction to something. I'm basing this decision on a process that I've tested, that I know works, and therefore I can pull the trigger, kind of thing. And obviously your rules will need to evolve over time. Your rules will need to be tested. Your rules won't work sometimes and will change based on what the market's doing sometimes, right? There is no perfect system, and the rules need to be appropriate to you, okay? And therefore, there can be a lot of variation. So, you know, there's no silver bullet for this market, right? There's no free lunches. I mean, any kind of profit you make is hard fought for, and if you're a trader, you'll know exactly what I'm saying, especially in particular market conditions. And so again, there's no silver bullet, but it's important fundamentally that you have a structure to what you're doing, right? Because it's just the fact that you have a structure is just a huge step forward to not having one, even if that structure doesn't work and you need to change it, right? And if there's anything that you really kind of took away from tonight, right? If you just kind of fell asleep at your desk whilst listening to this presentation, I hope this is just the one thing that you took away from it. Now, when it comes to picking direction, there's a couple of different types of analysis that traders like to use. Now, I say traders, I should say participants, right? When you're an investor, the type of analysis that you would probably do the most is fundamental analysis, right? And I've seen shorter term traders also try to apply fundamental analysis, but to not as much success, right? Technical analysis is the opposite in some ways, in a sense that technical analysis is probably just is just better for shorter term traders than it is longer term investors. Shorter term technical analysis plays out in the short term. It doesn't really mean much in the long term. Fundamentals mean everything in the long term and don't really mean much in the day to day. Okay, so depending on what your kind of time frame is, depends on which one you're going to lean on more. And that's an important note as well. It's not necessarily about doing one and not the other. It's just that you would favor perhaps one over the other. Okay, but as you can see on your screen, to differentiate between the two, fundamental analysis is looking at the company's balance sheet, right? It's looking at the health of the company, the sector it operates in. It looks at P ratios. If you've heard that before, it looks like its debt. It looks at its revenue versus profits. You look at the company report and you go, is this a good company? Is it run well? Is it in a sector that has longevity? Does it have good market share? Is it a growth company? Does it pay a good dividend? That's fundamental analysis, right? And it's something that I encourage you all to go out and learn how to do. Technical analysis, on the other hand, is about, in essence, if you distilled it down, it's about looking at past price action to help determine future price action, right? Now, you could look at a spreadsheet of all the past price action, but that would probably drive you nuts. Instead, we graph that, right? We take all those past price points of the stock and we graph it, and that's exactly what a chart is. So technical analysis is just about looking at charts. Essentially, it's just about looking at charts. Okay, you look at, yeah, and that's what we're going to go through tonight, obviously, because again, it's more favored for shorter term traders. All right. So the technical analysis is like painting a picture in some ways. It's an analogy I've written before, and if you type that into Google, you'll find an article I wrote like 6 years ago about this. And the reason why I say it's like painting a picture is because there's basic principles that you apply to a chart, and it's only once you've kind of applied those basic principles does the picture become clearer. So when you're painting a picture, you don't just throw color on it. I mean, you can obviously, but if you're painting a picture of a boat, let's say something you were doing still life, you weren't doing abstract, right? You can't just throw color on the page. You've got to draw the lines first. You've got to shade. You've got to add the color. You've got to do all these things before it becomes apparent that what's going on, before it becomes a nice picture. And technical analysis is the same. You can't just do one of these things, right? Or in my opinion, you shouldn't. It's about applying all these principles until the picture becomes clearer and you have confidence in the trade that you're going to do, right? Because that's a huge part of the issue with trading, or one of the key concepts of trading is that at the end of the day, you've got to have confidence in what you're doing, because psychology is really most of trading, right? And I don't want to get really stuck into that, but it will resonate with anyone who's experienced online. So this is a picture of the XJO. It was taken a few weeks ago. I forgot to update it, so forgive me, but you know, it's a fairly messy picture, right? I mean, that's yeah, it's pretty ugly in all honesty. But you can see there's a lot there's a lot of analysis going on. There's these weird orange lines. There's the obviously the main chart, which is the red and the green. There's the squiggly lines down the bottom. There's the other vertical green and red lines down the bottom there as well. Like there's just a lot going on, right? And charts can look way more complicated than that, and they can look a lot simpler. And there's no real right answer. But I guess what my goal is at the end of the night is to give you some understanding as to what you're looking at right here. Okay. So the first thing that we want to kind of look at when applying our technical analysis and is to start fairly broad and to start fairly simple, right? That makes sense. That's a good place to start, isn't it? So you have this really simple idea of looking for the trend and looking for the market range. And by the way, you should do this even if you're investing, right? I certainly think that you should do this type of technical analysis, even if you're investing, because it can really help time your entries. Okay, because the old saying was that it's not about timing the market, it's about time in the market. And I don't know if that's completely true anymore, right? It doesn't feel like our market has grown significantly since the GFC. You know, it doesn't feel like there's any particular, yeah. But look, that's a whole nother conversation, I think. But for now, if you're a fundamentalist, I feel like you could certainly benefit from technical analysis. So anyway, I digress. What you want to do is you want to try and draw lines on the chart. And the first one that you want to try and draw in is your trend lines, right? So here you can see I've drawn a trend line in, which acts as a bit of a support level, right? So each time the stock returns to the trend line, you can see it bounces back up, right? It happens at least 3, 4. It depends how many times you count this happening, but it certainly happens a bunch of times, doesn't it? The stock returns to this line and then it pushes higher. And what that does is it allows us to project into the future, doesn't it? Because we can keep drawing that line into days that haven't occurred yet, right? So the uptrend line is a type of support line because it supports the stock moving higher. The other thing that you could do is you could draw this like a resistance level, right? And we don't typically draw our trend lines on top of the stock, but when they're perpendicular, wait, is that the right word? When they're parallel, it creates a bit what you call a bit of a channel pattern. You can see the stock every time it gets to this resistance level or this uptrend line, it bounces down, doesn't it? So what you're doing at this stage already, you've helped define the range in which the stock is trading in the short term. Now, will it always trade in this range? No, obviously not. It's not always going to trade in this particular range. But it is right. It is at the moment, and it's just one piece of the puzzle, but it's a fairly important piece. The next is to look for key levels of resistance and support. Now, when we use the word resistance and support, it's a bit more traditional in a sense that it's a flat level. So you can see in the past, every time the stock has hit this particular level here and this particular level there, so it's the same level at that point there and that point there, it's pulled back. So it's gone down, hit that level and the uptrend line and pulled back, hit that level and pulled back again. So that's what you call a level of resistance because it resists against the stock from moving higher. It actually forces the stock to turn around. Okay, so once we've got our resistance in, we could also draw support, and you could draw support like at here, but it's not particularly relevant right now. But the resistance level must sit on top of the stock, and a support level must sit below the stock. So that was resistance throughout this period, as you can see. But now, because the share price is above it, it might actually act as a support level. So the next resistance level would be the top of this channel, right, where it's turned around before in the past. If that makes sense. Now, this is a fairly quick and simplistic approach, right? But once you've drawn your lines, right, once you've drawn your uptrend lines, your counter trend lines, your support, your resistance levels, Once all your lines are on the paper, and by the way, it's okay to have multiple lines. I'm just trying to keep things simple tonight, right? You start to try, what you want to do is you want to try and identify patterns. And there's a whole bunch of various patterns you can go and learn about. Like if you come along and do our course, we teach you about triangle patterns. We'll teach you about channel patterns. In one of our other courses I'm building right now, I'm actually going to go into more advanced patterns like flag patterns, candlestick patterns, these types of things. Once you've drawn your lines in, those types of patterns start to become a little bit more apparent. And what it does is it puts a bit of a narrative behind what the stock's doing, right? So it's a little bit romantic like that. It's talking about how, in this particular circumstance, the stock is trying to continue to move higher, but it can't. So it's trading in what you call a triangle pattern. And in this circumstance, it's called an ascending triangle, right? Because the stock's trying to ascend, but it's facing this level of resistance and it's being forced into the point of a triangle. Now, eventually the stock has to break one of those lines, doesn't it? It must either break the resistance and move higher, or it must break the support and perhaps move lower. Now, more often than not, the strength of the trend will prevail. And so the resistance is defeated and the uptrend wins and the stock does move higher. But instead of trying to trade before the break, what we often do is we try to trade on the break, right? Yes. So we tried to, can you see how it tried to break there and there, but it didn't? On this day here, that's the day that we could look at potentially trading it because that's a breakout there. So that's what you might call a bit of an entry signal. So it's all well and good to understand what the stock's doing. You've drawn your trend lines in, you've drawn your resistance, trading in a pattern, et cetera, et cetera, et cetera. But how do you know kind of what day to actually do it? And that's a really tough question. I mean, how many times have you guys been, well, for some of you who are experienced, I'm sure you'd agree with me, there's been plenty of times where you've been right, just not at the right time, right? So you thought the stock was going to go up or something like this, but the time frame that you thought it was going to do it in was wrong, and it just happened a bit later. And that happens to us. In fact, it happens to us all the time. Like if we have losing trades, it's quite often that it's quite often that we were just wrong for that period of time and that it would do what you're doing a bit later on. And I know you could possibly say that about every trade, right? Well, if you wait 10 years, of course the stock's going to go up. But I mean, if you're a bit more charitable, you'll know that I'm just talking in a fairly short time frame. So you want to try and look for perhaps some entry signals that give a bit more indication as to when you should enter. And a breakout is not a bad one, right? It's not the be all and end all, but it's not a bad one. The other thing that you want to perhaps measure is how the bar looks, and you maybe want to look at some candlestick analysis, right? And I don't want to really get stuck into that tonight because I've only got a limited amount of time, and there's some other things that I want to go through. The kind of the final piece of the puzzle, and I do want to express that this is really kind of the last thing that you do, is that you can look at your technical indicators. So what indicators are? They're essentially mathematical algorithms. And often they're, well, I think almost always they're represented visually as a graph. So what you have down here is a stochastic oscillator, right? That is basically a couple of different moving averages, and it sits underneath your chart, and you use it for a few different things. A beginner would probably just use it to kind of gauge a little bit of momentum and to kind of gauge where the stock is going. A bit more of an advanced user of the stochastic is perhaps more about divergence. Okay, so what we do is we use it to confirm, but just to keep things basic, you can see how they're pointing up and they're spreading wider, and that could indicate that it helps confirm that the stock is rising and that there's still some momentum behind the move. Okay, but the thing is, and I think this is really important to understand, there's a reason why I didn't start with this analysis, and I want you to recognize that. So if you use indicators like stochastics and things like that as your primary form of analysis, I think you should perhaps rethink what you're doing and do it at the end, right? I mean, at the end of the day, if something's working for you, then don't listen to anything that I have to say, right? Because that's a delicate thing and you don't really want to mess with it if what you're doing is working. if it's only kind of working, you want to improve what you're doing, then that might be something to consider. Is that ultimately a lot of rookies will lead their analysis with these kind of really quick and easy to use indicators, instead of actually using them at the end to confirm. All right, do all your other analysis first, and then let these indicators be confirmation tools. The other one that I like to use, and some people like this, some people don't. I mean, even some people in our office don't really use this, but I do. I think they're really, really good. Is the moving averages, and there's so many different moving averages that people use. But I think everyone would agree. Most people would agree that the popular ones are the 50, 100, and 200. They're I think they're the most common. And I think they're really cool. I think they're really, really helpful. What I like about the 50, particularly for shorter term styles of trading, is that it can often act as a bit of support level. And you can see that every time this stock has retreated to the 50-day moving average, it bounces higher. Now, do you need to understand the maths behind the 50-day moving average? No. Do you need to understand the maths behind the stochastics? Nope. Do you need to understand why technical analysis works? No, not really. I mean, to be honest with you, you can actually be fairly ignorant and also be a successful trader, right? I mean, it's only a very small amount of knowledge that you'd actually use in order to make money. But you're welcome to go and learn how these things work, but it'd be fairly academic, wouldn't it? And that's what kind of separates us from other, perhaps a degree or something like that, is that what we're trying to do is just really focus on the practical, cut to the chase, and figure out how we can help you make money. So you don't really have to worry about how these things work, but I think it's fairly evident to say that in this particular circumstance, the 50-day moving average certainly has helped prop the stock higher, right? So if the stock does retreat back to it, especially if it retreats back to the uptrend line as well, then it'd be fair to say that there's a good chance the stock rebounds once again, right? So all these tools are combining together to help create some kind of picture, right? As I said earlier, the picture of the boat that's becoming clearer and clearer and clearer. And that helps us make decisions and helps us be confident in making those decisions. So just to kind of recap, the first thing that we want to do is we want to look for a trend and range, right? And you guys are welcome to use this as a set of trading rules. I mean, if you don't have any, this is better than nothing, right? I think you want to go and learn about these things a little bit more, or perhaps a lot more, before you do it, and you want to be supported by a team of professionals, maybe us, I don't know, before you kind of get really stuck into it and paper trade and all that type of stuff. But I think this is a fairly good, simple approach to technical analysis. Begin by defining what the trend is, understanding what the short, medium, long-term trends are, define the market range, look for your key levels of resistance and support that have plenty of touch points, right? Look for patterns, or patterns, as I've written there for some reason. Patterns and breakouts, look for entry signals, confirm with indicators. You do want to consider your fundamentals as well. I think that's reasonable. So, for example, do I want to go long? Do I want to go bullish the market when there's the debt ceiling vote tomorrow? Right? Do I want to do that? Probably not, right? I mean, you can, because it's not I don't know if it's a huge consideration, but you might go, look, no, I'm just don't have that type of risk tolerance. There's a fundamental event going on. I'm not going to do it. Or you could be like, yeah, look, I'm actually not sure why this stock is rising so much. It is terrible stock. It is way overvalued. It's way overstretched, et cetera, et cetera, et cetera. I'm just not going to do, even though it's showing me bullish signs, I'm just not going to trade that stock because fundamentally it's just not sound. Right? So fundamentals can certainly inform your decisions. Don't get me wrong. And then the next step is obviously to plan your trade. And I am going to kind of run through that a little bit, right? Because it'll help me go into kind of examples that I want to show you tonight of trades that we've done recently that kind of apply a bit of a similar logic as to what I've shown you tonight. So, you got to think about it, right? Let's say you wanted to do a bullish trade on that stock. Obviously the simple answer is to simply buy it, right? You buy that stock and you hold it, and if it goes up, you close it for profit, and if it goes down, then you either close it for a loss or you hold on to it and you make decisions then, right? There's more sophisticated ways to trade though, which we think are much better. And you can see on your screen there that I've listed a couple, mini warrants and options. They're derivatives, which means they derive their value from the underlying stock. So for example, you can trade mini warrants and options on stocks like CBA and BHP and AGL. You're not buying and selling the stock, you're buying and selling an instrument which gets its value from what CBA does. It's a bit of a complicated, it's not simple to understand, so I really don't want to get stuck too hard into derivatives tonight. We have webcasts dedicated to that whole thing. We have courses dedicated just to that whole thing. But essentially, what they allow you to do is have a more diverse approach to strategy, right? So you can trade bearish movements, for example. You can trade sideways movements. You can do multi-directional strategies where you make money if the stock goes up or sideways or down and sideways. There's just a whole lot more flexibility, especially through the choice of leverage, right? So the ability to use less capital in order to make more money, right? So for example, if you had $100,000 and you were used to doing, $20,000, $30,000 trades on stock, because you kind of need that money in order to do kind of income generation approaches, in my opinion. And it depends on the stock, right? So don't hold me to that number. But instead of doing that kind of money, you could significantly reduce that down to say $4,000 or $5,000 and still get the same amount of return. The issue, of course, is that if you can make more money, you can also lose more money, because risk must be a function of return, right? So and that's really what this is all about, right? At the end of the day, you guys are online listening to what I have to say because you respect the fact that trading is a risky venture. It's not safe by any measure, right? If you want safe, well, there's varying degrees of that. There's the bank, obviously, which is super safe up until a certain point. There's dirt. You could bury it in the ground. I mean, you guys know what I'm saying, right? I mean, stocks are safer, but if you want to be able to make an income from the market, if you want to generate an income stream and you want to trade fairly regularly, that's a risky venture. And so you need to respect what you're doing. You need to be educated in what you're doing. And I feel that, and we all feel at this business, that these types of derivatives will provide you an edge so that you can actually trade, basically any market condition and have the choice of leverage. So again, obviously you don't fly blind, and you have a set of trading rules that help dictate where you kind of go with that. And I do want to run through that a little bit more now or in a moment. I basically explained all of that about options. I don't really want to get stuck too much into that. And then the next up would be to manage your risk. So we've picked direction, we've chosen the right trade, and now we need to just have some risk management rules in place, right? And that makes sense, doesn't it? Because you're not going to get every trade right. You're not going to get every trade right. And in fact, you're going to have strings of losses. I've been through that. Everyone's been through that. You'll be through it again if you've already been through it. I'm not trying to be negative, but I'm just trying to remind you that at the end of the day, risk management is extremely important, right? For those reasons. And you want to have a set of trading rules that helps you make decisions that aren't emotional, because at the end of the day, the hardest decision you'll probably make as a trader is when to close a trade. And not necessarily for a loss either, by the way. Anyway, so what I want to do is I was going to talk about the course that we run on technical analysis, but before we kind of get stuck into that, I'll show you a few trades that we've done lately, just so I can give you a better understanding of what we do. So I'm going to jump. You can't understand leverage? Alex, that's probably a bit more of a one-on-one kind of answer, but essentially leverage allows you, the outcome of leverage is that you can use less money. I'll give you an example. In fact, why don't we just give you an example? So this is a trade recommendation we did recently. We did it on the 23rd. I think this is the latest recommendation we did on a mini warrant. So we did a mini long. It was on the 23rd of August. We made about 27% profit, just hasn't been updated there, and I don't know why. But the 23rd of August is when we put out this trade. So this is what happens is that this is what our online portal looks like. So if you become a member, that can be, you can just become a member, or you can do a course and you get membership with the course. You get access to all these kind of resources. You get like education resources, you get calculators, you get market data, trading news, you get all this kind of stuff. It's really cool. One of the things that we do for our clients is we give them trade recommendations. So if we see a trade that we like, there's ones that fit these like really strict like rules-based approach. That's these strict rules that we teach you. And we'll send you like an email, right? And we'll send you a text and we'll say, hey, this is a trade. Go have a look at it. And this is what we think. We give you a bit of a trade analysis. We tell you where we're going to potentially take profit, where we're going to stop loss out, suggesting a price in which to get in. So it's very, sometimes there's a lot of analysis, sometimes it's very, very simple because again, it's a rules-based approach. And we give you a chart. Now, for me, this is not the chart that I was kind of drawing. Someone else kind of pasted that in. I'll show you on how I was kind of doing it. Excuse me, hang on a sec. This is the trading software. Well, this is one of the trading softwares I use. What day did we enter? We entered, let's stay here. So I had what you call a bit of an acceleration. Yeah. I'll put that over here. So I had you can see that's the chart there on the day that we entered. I had a bit of an acceleration up through here, right? It has a couple of touch points. It kind of defines that the stock was bouncing off the support. And I think they had like this downtrend line there to show the breakout. So we did kind of the same thing, right? We've got our moving averages. You can see it bounced off the 50 there, right? I might just make that a bit thicker. Like I'm aware that it's not a very thick line. You can see it bounced off the 50 there, and it's bounced off it again there. So it gave us some confidence. You can see this uptrend line in play. It bounced off there as well, and there as well, roughly speaking. It broke the short-term counter trend line, and it broke out of what you call a pennant pattern. The stochastics were crossing over and pointing up near the oversold area. There was just it basically fit our rules for a bullish entry signal. And there was, as we said earlier, there was plenty of room to this level of resistance up here. Now, we put this out to our clients, and theoretically, you would hope they went and looked at the chart, they read the analysis, and they accepted the trade and sent us through the text. But I'm just trying to give you guys a bit of an understanding as to kind of how we do our analysis, and there's more to it, right? Obviously, there's more that I'm not running through because I'm not going to give you all the secret herbs and spices, and I certainly don't have the time. But I'm just trying to give you an idea that it's about having a bit of a process, and we write most of it down, right? Another type of example of a strategy is a CBA bull put that we did. So this is an options trade. Now options are like crazy good, but also very complicated. And so you don't go and try and teach yourself options, because I don't think that'll work for you. But before I get stuck into that, I should probably answer that question. So in this circumstance, we risked about $3,000 and we made about a 27% profit. You're just gonna have to trust me on that. That's not possible in the amount of movement, because look what the stock did. That's what the stock did. So from here, I think we closed somewhere around here or something. We closed that day there maybe. So we made 27% from here all the way up here. You couldn't do that if you just bought IGO. That's not possible. And that's what leverage allowed us to do, Alex. So that's what's great about these derivatives, is that they allowed us to use less money. For us to make the equivalent of whatever, we can do the maths here, 2,975 times 0.27. So we made about $800, right? For us to make the equivalent $800, we would have to risk far more than $2,975 if we were to buy the stock. Right? If you just bought the stock, you wouldn't have made that $800. And that's what leverage essentially is. So moving on to the bull put. This is a CBA bull put. Now, look, the banks can sometimes go for runs. Obviously, that's just what they do every now and then. But often, I would say it's fairly reasonable to suggest they like tracking sideways for long periods of time, mind you, right? So they'll they go sideways, have their run, go sideways, have their run, go sideways, albeit it drifted, has their run, and now they're going sideways again. And this can be hard to trade directionally. So what we can do is we can implement option strategies where we profit from sideways movement. And here's a perfect example. We wrote all this kind of stuff around why we did the trade, and here's the picture of a chart. So again, if we're to run through the analysis, you've got the trend line drawn in there, right? You've got a bit of a range drawn in. There's the resistance level up here, and you've got the couple of support levels there. You've got the moving averages in play. You've got the stochastics crossing over in the oversold area, and I mean, there's a couple of other things there that I haven't run through, but ultimately we ran through that process, right? Oh, and by the way, we've put out matrices. So this is what the profitability of the trade looked like at different prices at different times. So if it went up, you would make that much money on these days, right? By the way, roughly speaking, right? It's not perfect, that's for sure. But it's pretty good, right? So when we entered the trade, we kind of looked at it and went, okay, well, if it goes up to say $103, and it takes, let's say, 4 days to do it, we know we're going to make roughly $1,000, right? Our initial risk, by the way, was about 4,300. So you're looking at about, let's say, 20 to 25% here, roughly about 25% there. If it rose to about 103, you can see 103 is roughly around where my cursor is. So it was a bullish trade, and you can see that obviously you lose money if it was to go down. So if it dropped down to say $98, right, in 4 days' time, or roughly speaking, you would lose about $900. But interestingly, if it dropped down to $98 in a few weeks, right, then you would actually make money. And this is what's interesting about this trade is that you profit if the stock goes up, you profit if it goes sideways, and you can even profit if it goes down a little bit with enough time. So it's a really cool strategy from that perspective. We use it when we're being defensive. So, and it's not because someone's insulted us. We're being defensive because we're not particularly confident in a stock market rise, but we think that the stock market may track sideways, or in this case, CBA, right? So we sold a put and we bought a put. If you don't know strategy, it doesn't bother me, but ultimately you want it to stay above 98. If the share price stayed above 98 by the expiry of the trade, we would make our maximum profit, and that's exactly what happened. So in this circumstance, we made our maximum profit. Okay. And the maximum profit, by the way, if you're wondering, was about $1,500, which is, I mean, that's not too bad on about 34%. About 34% on the risk that we did. And all it needs to do is stay above 98, which is like down there. So yeah, it's a anyway. So those are a couple of trades that we did. A couple of trades that we're actually still in, right? The most recent one is this Aura Cobra one. And these are all recent, by the way. You can see this one was on the 24th of the 8th, just over a month ago. And this one was on the 23rd of August, which is also about a month ago. These ones we're still in, right? We've got this this mini long, which was done on the 22nd of, so about 8 days ago. The risk was about $2,000, and this is what the chart looked like. So again, we defined the trend, and we drew the trend line in. And this is a shocking looking chart, by the way. I'm sorry for the quality, but so we're in a rush when we put these out often, right? So we've got the uptrend line there. We've got the defined range. So we've drawn in the support there. You can see that when the stock's returned to it, it's bounced, returned to it and bounced. We've got the resistance there. So every time the stock gets there, it turns around, gets there and turns around, and one more time. And we have the counter trend movement and the line that's breaking today. So remember how I was talking about triangle patterns? Can you see how that's a triangle pattern there? That's broken out of the triangle that day there. And so we use it as a bit of an entry signal, and we put out this trade as a recommendation. Now we're still in this because it hasn't done exactly what we thought it would. Let's go have a look at what it's done, right? We haven't actually closed this one out. So again, I haven't got some other lines drawn in, but that's all right. I'll just draw this range because it's channeling, right? That's what it's doing. Which day did we enter? Was it that day there? Gosh. Okay. So we entered that day there. So you can see that it actually did go up a little bit. Now it's come down to retest. And look, we might get this trade wrong, right? I mean, that's reasonable, but you can see the last time it went up and then it retested before going back up to the top of the channel. And all we're trying to do is just make money if it gets back towards this kind of level here, right? Somewhere around there. We're trading with the trend. The trend is your friend, as they say. So hopefully that we get that. Just like the previous trades, we've put in a payoff matrix that again shows you what the profitability would be with certain share prices over a certain period of time. And this is something that we always put out when we do a trade so that you can plan effectively. And again, we'll probably look to take profit around, say, $9.90, something like that. If we can walk away with 20% profit, we're pretty happy. Maybe, and sometimes it's 20%, sometimes it's like 100% or 50%, right? It depends on the strategy. So that's one example of a mini warrant that we're in. An example of an option trade that we're in. This one's called a bull call spread. You can see there was a little bit. In fact, there was a lot more analysis behind this particular strategy. And this is what the chart looks like. So again, a fairly consistent channeling pattern there. I think Seek's not a bad fundamental stock as well for reopening, right? Because you perhaps maybe looking at more jobs listings and people using Seek as a way to get hired, that type of thing. Just as a very kind of basic form of looking at the stock as a company rather than just looking at the chart. But that's not really what we based our analysis on. But I think that's worth mentioning. From a technical perspective, you can see that we've defined the market range. There isn't a clear defined trend in that scenario. But if I do jump across to the actual stock, right, Seek, for example, you can see that it is trading in an uptrend, right? The question is, can I draw an uptrend line that I'm happy with? And the answer might not be yes. It might be yes, but it might not be yes. And so that's probably something you could draw in, right? You can draw in the support level through here. You can draw in the resistance level through there. You can probably draw in even the interim resistance through there because you can see it was bounce there, bounce there, bounce there. I'll zoom in a bit for you guys. You can see. But ultimately, what we've done is we've defined the trend, we've defined the range. We're looking at the moving averages, we're looking at the stochastics, and we're still in this trade. I think some people tried to close today. I don't think that they were successful in closing, but they're at about roughly a 20% profit roughly. Okay, and that was the day we entered there. So that's still running. And finally, just one more, we've got another option strategy. I just wanted to give you a few different examples, right? And this is, again, one of the banks. This is ANZ. Very similar to the CBA trade. We did a CBA bull put, and now we're doing an ANZ bull put. We're spreading the love. Again, fair amount of analysis there. If the share price remains above the sold leg, which is, if it remains above 26.50, we make our maximum profit by expiry date, which is the 21st of October. So on the 21st of October, in exactly 3 weeks time, if the share price is above the sold leg, we make our maximum profit, which is 26.50. Now we can actually look at closing now. Some people may choose to close now, depending on how much risk you put on. Right now, they're at about, I think, about $700 profit roughly, or 650. If you did the recommended minimum amount of contracts. If you did more contracts, you're going to be at more profit. But yeah, each person's different. So that's a trade that we still got going on. Again, as long as it stays above 26.50 for the next 3 weeks, which is here, we make our maximum profit, which is good. Our maximum profit, mind you, is let's say, I can't remember what the average fill was, but let's say it's 12. Times 100, which is 1200, divided by 3800 risk. So it's about 30%. Your maximum profit is capped at about 30%. Right. It's not unlimited profitability. It's capped at about 30%. So we'll be pretty happy with that, but we might suggest a close, right? If we get to 25% or 20% profit, we might just suggest a close, right? But it's obviously each person. What we do is we don't trade for people here at Trader Circle, so we don't want to make decisions for you. And there's reasons why, which I'll get to in a moment. Instead, what we want to do is we want to equip you with these skills so that you can make your own decisions, right? We think that's a healthier relationship. When you're investing in stock, again, it's lower risk, so you can justify. You can go, okay, well, look, I'm just going to buy these stocks. I've read this book, and this bloke says this is how you kind of buy stocks. I don't think you're going to get too much harm done that way. But if you read a book and it says this is how you trade options, there's a lot of harm can be done. I think that you do want to learn from a professional how to do it. You might go, okay, well then why don't you just trade for me? I don't really want to get involved. How about I just give you a whole bunch of money and you do it? That's a bit of an issue as well because we don't know what your risk tolerance is like, and we only provide general advice, right? So the best trader for you is you, right? And that's the type of person we want to work with. So if you're interested in becoming a trader, like let's say you wanted to be able to generate an income stream, you wanted to be able to just kind of get a passive income from the market on the side, whilst you're with your main occupation, or if you run a business, that type of thing. If you just wanted to be able to generate an income stream and you found the market interesting and you thought this is something that you can enjoy, then I encourage you to come along and have a look at a course that we run. So I'm going to run through that right now, and hopefully you guys will indulge me. But again, this type of course is suitable for beginners. It's also, I think, good for experienced traders, right? Obviously, it's a beginner's course, so if you're wanting to learn how to do this properly, this is a great place to start. But even if you're experienced, coming along and learning from us and doing this course is going to be extremely helpful, because if we can improve what you're doing, even if you pick up one or two things over your lifetime as a trader, that's going to be extremely helpful, right? Because trading is not a short-term pursuit. You can be a short-term trader, but it's a lifetime pursuit. This is something that you can do really anywhere where you are. This is something that you can do in retirement, and a lot of people like doing it in retirement because it keeps your mind active and also helps you generate an income stream. You can translate this to other forms of trading and investing as well, so it helps you across the board. What this course is about is it's about fast tracking your learning. So everything that we teach you, you can actually go, well, not everything. A lot of what we teach you, you can probably go find in a book somewhere, but that's a lot of reading, and it's probably a lot of wasting of time, in my opinion, right? Instead of doing that, you can just come and pay for this course, and you can learn from professionals in a much speedier amount of time, and you can be supported whilst doing it. It begins with a 2-day face-to-face training session with the co-founder of Trader Circle, and his name is Carlo Castellano. And if you quickly read some of the words on those recommendations we put out, he actually put some of those out. So he's semi-retired now. He just works from home. He trades at home. He still runs our courses. Carlo's been teaching and trading for over 20 years, way before Trader Circle. But he puts out those recommendations to our clients, because if he sees a trade that he likes that he trades, he'll actually let you know what they are, which is really cool. So you're actually learning from someone who is not only a professional trader, but also someone who's really good at teaching, and that makes a very big difference. And we like to limit the size of these groups to about 10, right? So we don't take in more than 10 people. We want to cap it to a small enough size where we can focus on you as an individual, whilst also maintaining a good dynamic in the classroom. And look, I say classroom, but at the moment it is live stream. That's, look, you're going to have to think about that. When was the government? So I think the government is looking to change that at some point, obviously. But for now, it's still live stream. When we're allowed to have you in our office, we'll do it as a classroom. We do it in our boardroom. But until then, it's all done online, and you can see Carlo's face, you can see the screen, he can see you, you can talk, and it's exactly the same thing. And if you felt like you didn't get the full experience and you are unhappy, then you can come along and do the face-to-face session as well as our guest, right? Just as a special kind of offer. If you don't like the live stream and you're not satisfied with it, then you can come along and do the course all over again for free, basically, face to face. What we're going to focus on during that course are those 3 major pillars that we think you need to be good at. And we'll bring it all together with a very strict set of trading rules that Carlo uses to this day. So you're learning exactly how a professional trades step by step. Okay, they're the same rules that he uses. It's the same rules that he uses when he picks those recommendations and the trades that he places for himself. You're going to learn those. The picking direction component pretty much covers everything that we've covered tonight, plus obviously a whole lot more. The strategy component covers mini warrants, right? A very simple tool that you can use to trade bullish and bearish market conditions, and also to gain a bit of leverage. And obviously we'll cover risk management and capital management as well, because obviously that's the final piece of the puzzle there. Following the 2-day workshop, there's 8 weeks of extended learning, right? You have access to that members area I just showed you, where there's training videos, there's the recommendations. Actually, one thing that's really interesting about our business that I don't think any other business does is we run a webcast from 12 to 1 Monday to Friday. And we go through the market and we look for trades as a live group together. So for example, today, my colleague Ben, he ran his webcast from 12 to 1, and old clients, new clients jumped on. They went through the market, they looked for trades, etc. I run mine on a Wednesday. So from 12 to 1 on a Wednesday, mine's more focused on options. So if you're a beginner, you might not attend mine, but you could probably jump on and say hello. But ultimately, we just go through the market and we look for trades, and we do it as a live group. And that's really helpful for people who are learning, but it's also really helpful for people who are trading as well and who are looking for trades. So that's every day. If you can't make the 12 to 1 session, they're recorded and they're placed on the website that night. So you can always catch up. Aside from the 8 weeks access to our members area, we'll give you access to all the technology we use. So the calculators where we had the payoff matrix, where it was kind of showing where your profit was. You have access to that. You'll be able to price up your own ones. We'll give you access to the trading software that I was using, right, to draw my lines, and we'll teach you how to use that. And finally, you get your own personal trainer. And for me, this is what really separates us. Again, what is fundamentally important about our business is the fact that we provide you with so much support. The epitome of that is the fact that you get your own personal trainer. And what they're there to do is, as I said earlier, is to really kind of just answer all your questions, keep you on track, make sure you're not making those silly mistakes that you're going to be probably going to make as a beginner as you're learning all this stuff, and just reinforce all your learning. When you're running, when you're practicing and you're learning, you're watching the videos, etc., what we actually do is we run a paper trading competition. It's like you're given a demo account, everyone's given the same amount of money, and then the idea is that you use what you've just been taught, except it's just obviously with monopoly money, right? And you try to make the most money as possible. The person who does wins a special prize, right? And that competition will last for about 6 to 8 weeks. And you can use your trainer as much as you want. So if I was your trainer, you could call me up and go, I'm in this paper trading competition. Have you got any trade ideas? Or what do you think of this trade idea? Or if, let's say, we put out a recommendation, you could possibly trade that in the competition as well. The idea is to try and simulate real trading, obviously. The idea is to simulate real trading, but it's not. And so eventually what you're going to have to do is obviously dip your toe in, and you'll have to start transitioning to live trading. And that's what really this is all about. The good thing is that you're not alone. So you have your trainer there. You have your advisor now, who's there to kind of hold your hand as you transition to live trading, right? They're there to help you pick your direction. So you could call up and go, look, I've been paper trading. I've been doing well on paper, right? I've been making money on in the paper trading competition. And so I want to place my first real trade. I just want to double check that I'm picking direction right. I just want to double check that I've got the right strategy, that what I'm looking at is correct before I place it. And that's what we want you to do. We encourage that kind of communication. And so we'll take the time and we'll, and by the end of that conversation, if you still wanted to place a trade, I could do it for you so I can execute your orders. Or you could go and execute that order online. You could go and do that online yourself, and I could watch you as you place it online just to make sure you're doing everything right. Okay, so again, it's a very high touch environment. Our business is very much about supporting you. It's about long-term relationships. We're not, we don't run lots and lots and lots of courses. We don't have lots of courses that we upsell you into. Our business is really solely focused on retention, right? We've been around since 2005. There's only about 12 of us who work in the business. We've all been with the business for years. And the reason why we're able to survive in this type of marketplace against other competitors is because we have a good retention rate and because we like to give you so much support and we build strong relationships with our clients. So if you'd like to join our group, then again, maybe consider coming through the education side of things. If you're interested in this particular beginner's webcast, it's a deposit of $995, and then you just pay one more payment of $995, which means the total investment of the program is $1990. Now that includes the 2 days face-to-face in our boardroom, if you can come along, or online, if we have to do it that way. It includes 2 months of access to all the online material, the trading software, the technology, the trade recommendations, the market data, the videos, the webcasts, all the bits and bobs. And most importantly, you get access to your own personal trainer. Does that sound reasonable? I mean, education for us is not really a profit center, right? It's not something that we really make money from. Education is a stepping stone, right? If we can help turn you into a successful trader, right? And you see the value in the services that we provide, then you're going to continue to use them, right? So really what we want to do is we want to get in the right type of people, right? Because again, we only take in 10 spots. So we want to have a conversation with you first. You can't just book yourself in online. Have a chat to my colleague Jared, or you could have a chat to me. It doesn't bother me. If you call the business, there's a good chance I pick up the phone anyway, and we can have a conversation about whether or not this is suitable for someone like yourself. So I really appreciate you guys jumping on tonight, listening to what I have to say. I think, what time is it? 8:02. That's not bad timing. I believe I started at 7:02. That's an hour on the dot. How's that? I'm going to be honest with you. I can't remember the last time that's happened before. So yeah. Again, I appreciate you taking the hour out of your night to listen to what I have to say. If you're interested in some more information about the course, type in more info. If you'd like to book a spot, or at least have a conversation with us first, type book, and you can have a chat to me or Jared, who's our market advocate, before signing up. If you'd like to view this recording again, or this webcast again, there is a recording that will be sent to you tomorrow, I believe. And again, check out our website, check out our YouTube page, like and subscribe, do all that type of thing, and have a look at some of the other stuff that we do. Because if this doesn't really suit you, then there's a chance that we'll be able to help you in some capacity. All right, guys, I might finish up there. All right. Looks like I answered all your questions without even knowing it. So I really appreciate, again, you all jumping on. I'll perhaps see some of you on next time. Good luck and happy trading.